Hello, welcome to this video. If you are watching this, that means you either got the link from sheet on the instructions page, or perhaps you are watching the video that I posted to my YouTube channel, Gen Z Finance, where I actually went over and went through my numbers and how I use this spreadsheet to help me plan out my 2021 budgeting. But no matter how you got here, I call myself Gen Z Finance. Like I said, I have a YouTube channel where I go over my bi-weekly, monthly budgeting, lots of budgeting stuff, primarily using You Need a Budget or YNAB. But this is a spreadsheet that I have specifically made for myself to kind of help me do yearly planning, or anytime I get a new job, or my deductions change, or anything with my paycheck is changing. This is a process that I like to go through just to make sure that I have enough take home pay to cover everything I need to cover and give me a sense of what I can realistically accomplish with my yearly goals, investing, saving, spending, all of that. So we're going to kind of jump right into this because I have a feeling this video is going to be pretty long, and you might not actually need to know all the information I'm going to cover in this. Some of this you might just be like, okay, I don't care about, but this is the full explanation of this workbook in case you're interested. So when you download my workbook, which if you haven't yet already, there will be linked down in the description box, there are 3 tabs that you will see. I'm currently showing you the first tab, which is where you would start. It's the instructions and steps. So this will give you like step by step everything you need to do. The second sheet, spreadsheet, this is what I use for myself. And then the third tab, and I'll talk a little bit about the difference between them, because when you flip back and forth, the second tab versus the third tab, there doesn't really seem to be like too much of a difference. So this third tab is kind of what I recommend you use if you have a more complicated tax situation, or if you're just not so much as interested in the paycheck deductions as you are with the general, okay, here's what my monthly income will be, and here's what the breakdown of my monthly expenses will be, and then, the kind of planning on how to invest and save. So if you're just more interested in the later half of this spreadsheet, and again, I'll go over each section more in detail, then I would recommend using the third sheet for a couple reasons, which we will get to. So at the top of this, I just want to say this spreadsheet, specifically, this main one here with this federal taxes section, is going to work best for people who are W-2 employees who work in the United States. The reason this is because to calculate what your taxes will be, both Social Security, Medicare, and federal income taxes. So the more simple your situation is, the better this will be for you. So and then on the third tab, but kind of like the second spreadsheet, and I guess I should probably like name this, we'll call this the simple 2021 paycheck planning and budget overview spreadsheet. This is going to allow you to be maybe a bit more in control of how taxes are calculated, because on this spreadsheet, I took out all of the formulas for calculating your taxes, and I'll go over how you might be able to do your own taxes and calculate that for you, or you can just, if you know what your monthly income is going to be, just enter it in here yourself and fill out everything else without really having to worry about your paycheck deductions. So again, there's really 2 ways to use this, but we're going to go over everything. Okay, so with all of that being said, we're going to start on the main 2021 paycheck planning and budget overview spreadsheet, and I'm just going to take you from the beginning. So I'm going to fill this out as if it was not, for me. If you're interested in seeing exactly how I use it, again, I'll link a video up here for you to watch how I use it and with my numbers, but in this case, I'm going to use different numbers. If you're paid hourly, you have a set annual salary, and this is your base salary. Don't include any commissions unless those are like guaranteed and broken up evenly every month or every pay cycle. No bonuses or anything like this. This should just be your base pay. That's what you're going to enter in this first line. You don't need to worry about any formatting. It's going to automatically format to the accounting, dollar sign. However, if you're hourly, before you come to step 1, you kind of have to come down here and do the hourly workers square. So this is pretty simple. You're just going to enter in your regular, in this case, this person is paid $25 an hour. Then you're going to enter the number of hours you work per pay cycle. So this person is paid bi-weekly, which means per pay cycle, they work 80 hours of regular time. They're full time, so 40 hours a week. 40 times 2 is 80. And then you have the option to put in overtime rate. And if you work different hours of overtime every pay cycle, I would just use like your best guesstimate for how many hours of overtime you work per pay cycle. In this case, this person works 20 hours of overtime per 2 weeks, so 10 hours each week. And then here again, you're going to enter how many paychecks a year. So this person is paid bi-weekly, so they get 26 paychecks a year. And so then you get your annual salary. Again, if you're hourly, this might not be perfect, but you should use the numbers that are your worst case scenario. But for this person, they are paid $71,500 a year. So that's the number that we're going to enter up here. And then from here on, whether you're paid hourly or salary, it's pretty much the same process. So the next step is to select your pay frequency. You have 4 options: weekly, bi-weekly, monthly, semi-monthly. This person is paid bi-weekly. And if I'll just show, if you select monthly or whatever, that will change the number of checks per year that you get. So this person is paid bi-weekly, and then it's going to calculate for you your gross pay per check, in this case, $2,750. So steps 3 through 5 are to now select your pre-tax employer-sponsored retirement accounts. I have put in the options for, you can select down 5 different options, or if you don't have any of them, it would just be NA. In this case, this person has a 401k, and the next step would then be to select the account and then enter the percentage that they will be contributing towards it. This person will be putting 10% in. So that will calculate the amount in the line below. So in this case, $275. If you have multiple accounts, again, you would go through the same steps in 4 and 5. And then if you don't, you would just select NA. If you have more than 3 pre-tax accounts, first of all, that's awesome. I hope you're contributing to them all. Like, let's say you have 4 accounts and you have a pension, a 403b, a 457, and another pre-tax account. You can either combine 2 of them into one line. So in this case, you would just say, okay, I have a pre-tax 457, but you put, 3% to your 457 and 2% to your 403b. You would just do the combined 5% in this line. So that's one way to handle it. Or I do give you the option in steps 11 and 12 to enter 2 other pre-tax deductions. You would just have to put in the exact amount, not a percentage. So again, there are some options for you there. Then the next steps 6 through 8 involve kind of the same thing as your pre-tax retirement accounts, except this is for your HSAs and FSAs. You're going to select down from the menu if you have any HSAs or FSAs. If you don't, you would just select NA and leave that as 0. But in this case, this person has an HSA, and their contribution, yearly contribution throughout the entire year, is going to be $3,000. Now, their employer is going to contribute the other $600 to max them out at the $3,600 for the year. So, but they don't count that $600 because that's not going to come from their paycheck. And then they have a dependent care FSA as well, where they're going to do $1,000 for the year. So you're going to enter that information in steps 6 through 8. Again, if you have more than 3 FSAs or HSAs, I recommend either combining 2 of them into one line, or again, using the pre-tax deduction. Next step is to enter your medical insurance or premium. In this case, this is per check. This person has a medical insurance of $45 a check. And then the next step is to do the same for your combined dental, vision, and if you have a pre-tax life insurance premium. So this is going to come up here, and you can see I already have a formula, so you can just replace the zeros. So for this person, they have dental for $15 and vision for $5, and then they don't have any other premiums, and it does the math for you, so that's $20. So steps 11 to 12, if you have any other pre-tax deductions, this is where you would put the amount in. If not, just leave those at 0. Step 13 is to enter the number of checks per year that your HSAs and FSAs are taken out of. So this is the number that is used to divide your yearly contribution by. For most people, this will probably be the same number of checks that they are paid each year, but there are some companies, I know for me, I am paid bi-weekly, but on those third paycheck months, I don't have my HSA or medical deductions taken out of. So they only come out of the first 2 paychecks of every month. And most of the time, those are the only 2 paychecks, but on those 3 paycheck months, the third paycheck doesn't get that taken out of. If that's a different number for you, I give you this line to add that. In this case, this person gets it taken out of every paycheck, so that's 26. And then you have the option in step 14 to enter your combined state and local income tax rate. I'm going to say for this person, we live in a state that has no state or local income tax, so we're just going to leave that at 0. But if you lived in a state with 5%, you would enter 5. And that will change what is coming out of your total taxes category. For now, we're going to skip the taxes part and we will come back to that later. And then the next steps are involving any post-tax, after-tax, or Roth contributions. So if you have any Roth, I know this says other Roth account. If you're doing an after-tax 401k, you might want to just call it a other Roth account. Or if you don't have any Roth accounts, you would just say NA. But again, you're just selecting the account and then whatever percentage. In this case, this person will be doing 3% to their Roth 401k. And then steps 16 and 17, similar to steps 11 and 12, I give you the chance for any other post-tax deduction amounts. Briefly, we'll talk about step 18. If your employer at the end of 2020 was participating in the payroll tax deferral, that was part of, I think, President Trump's executive order, you would go ahead and check this checkbox because you're going to need extra Social Security tax withheld from your paycheck for the first, I believe it's the first 4 months. So if you select that checkbox, as you can see, it will tell you how much extra Social Security tax you will pay per paycheck. And then it will show you what your net paycheck is per paycheck and then what your net monthly income is per month. And if you just look at these two numbers, they are different. They are lower than what is showing as your net paycheck and monthly income in the summary section. And this is determining what your paycheck and income is based on what you enter in steps 1 through 17. So I'm going to unselect this because this person's employer did not participate in that. So next we're going to talk about the taxes thing. So again, I want to reiterate, this is something that I created for myself. And for me, this system works very well because I have a relatively simple tax situation. I'm single, I take the standard deduction, and like that's it. It's that simple. So I can't confirm that the more complicated your tax filing situation is and the more complicated your W-4 is, the less this section might be accurate for you. And we'll go over what you can do and how you can approach this issue when we get to the simple spreadsheet. But in this case, if you have a really simple tax situation, this should be pretty accurate for you. So you're just going to select your tax status. This person is single, and then it's going to assume you're going to take the standard deduction. Now, if you fill out your W-4 where you're taking more than the standard deduction, you might need to do the difference between what you're actually going to take versus the basic standard deduction and fill that in here. So for example, if we pull up the calculator, if you are trying to take a deduction of $20,000, you're going to need to take the $20,000 minus the $25,50, and that's $74.50. And that's what you would want to enter here as extra deductions. And you see when you enter that, that will lower the amount that you'll be taxed on, which will then lower your tax bracket, in this case, the tax bracket, and then the yearly tax estimate, and then the per paycheck federal tax estimate. And this number is included in the total taxes line here. This total taxes line includes Social Security tax, Medicare, and federal income tax, and the state tax information that you enter in step 14. But again, I'm not a CPA, I don't work for the IRS, I don't even work for payroll. I cannot confirm that just because you fill out your W-4 a certain way, this is how your employer will take out the money. I don't know for certain, and since I don't have to fill out any of the extra deductions sections or anything like that, I'm just not 100% certain about how it works. So again, we'll get to how maybe you can approach that problem if you have a more complicated tax situation at another time. So this is just like your per paycheck estimate, but if you want extra withholded from each paycheck, this is where you would enter that here. In this case, this person wants another an extra $10 per paycheck withheld, which is now calculated down here in the total taxes and is now being taken into account in this summary section. Before we go much further into the summary section, this FICA taxes section is just a little snapshot. I have some formulas in here to help calculate how much is being deducted for Social Security and Medicare taxes, because if you make over I think the max for 2021, and I just wanted to mention, I'm using 2021 tax information for all these numbers. So this is not the 2020 tax brackets or standard deduction. This is 2021, and I'm getting this information from taxfoundation.org. So that's where this information is coming from. So if your Social Security taxable amount is over $142,800, then the max that you will pay in Social Security tax is $8,853.60. So this formula does stop itself. If the answer to F13 is yes, it does max out your Social Security taxes at that $8,000 and then spreads that $8,000 evenly throughout your paychecks. And then similarly, if you make more than $200,000 that is taxable for Medicare tax, you are charged an extra I believe it's 0.9% in Medicare tax instead of just the standard 1.45%. So again, I'm not a CPA, but I did try to take that into account, and I did try to take that into account when doing the FICA taxes here. And again, that's kind of why I have these different colors, this red and blue in the paycheck deductions. There is a key down here that shows you the blue colors are deductions that will lower your FICA taxes, as well as your federal taxes, but it will lower your Social Security and Medicare taxes. And for the most part, that is HSA contributions, FSA, and then medical insurance premiums. And then the red colors are pre-tax deductions that won't lower your Social Security or Medicare tax, but will lower your federal income taxes. Okay, so once you go through steps 1 through 21, then your summary section should be almost complete and pretty good. So again, this is where you will find your net paycheck. In this case, this person will be bringing home $1,743.38 every 2 weeks, and then the monthly income. Now, if you are paid bi-weekly, this is going to assume it's just a 2-paycheck month. I do have a section over here where we can talk about 3rd and 5th paychecks if you're paid bi-weekly or weekly, and then if you're paid weekly, it's going to assume a 4-paycheck month. Okay, so that's steps 1 through 21. Step 22 is to then fill out your monthly budget and breakdown. So there are 26 categories here, and these should be your basic categories for your budgeting. If you have more than 26 categories in your budget, you're probably going to need to condense and group things. So for instance, maybe instead of doing electricity, water, gas, and trash, you just call one whole group utilities. Your first one is rent or mortgage, your second one is utilities, and so you're combining them. If you split up dining out and groceries, perhaps you try to, in this case, combine them into one food category. Again, this is really customizable for you. However you want to approach these categories is totally up to you. However, you are limited to 26 because, and I should have mentioned this right off the top, you should not insert, delete, or hide any rows here. So if you have more than 26 categories, I suggest trying to find ways to consolidate a couple of them into one line to make it easier for you. And I've broken them out into 2 separate categories. The blue is what I would call monthly spending categories. Exactly what is a spending category for you is up to you. It could be different for everyone. I had some of my sinking funds, such as gifts, saving for travel, car maintenance. I had some of that in my spending categories, although I'm sure some other people would think of those as saving categories. So again, it's up to you. You have 17 spending categories as notated by the blue, and you have 9 saving categories. So saving categories could be saving for emergency fund. It could be, maybe this is where you notate your debt payoff categories, even though that's money you're spending every month. Maybe you consider that, savings or something that's going to increase your net worth. I kept my Roth IRA line in here, my monthly contribution to my Roth IRA, was in my savings categories. So again, it's totally up to you. It's pretty customizable. And then you're just going to fill out what your prediction is for your 2021 monthly budget. In this case, I'm going to say this person's total expenses come to $3,000 for all of the spending, and then I'll put 100 into the saving category. So you can see how it totals it all up to 3,100. And then in the summary section, again, monthly expenses is reflected in red as 3,100, and then it will break down if that is for your spending categories and your savings categories. The last line in the summary section is this monthly excess/buffer. You can think of this as extra cash flow. This is money that, based on your monthly income, is not already pre-designed to one category. So if you have a true zero-based budget, this number is probably going to be zero. I do recommend you have at least $5 to $10 in this line as a buffer, just in case the math on this paycheck deduction stuff is off. So if you're down to like $5 left, then consider this, you have no excess buffer, you have no, extra cash flow. That's just my piece of advice. So that way you're not over budgeting just in case any of the math is off. But if you do have a bigger chunk, like, okay, well, all of my monthly expenses only come out to $3,100 and I have almost $400 in extra cash flow, there's a couple steps you could take. You could either decide, okay, then that means I'm pretty confident that I can increase my, in this case, instead of saving $100 a month, let's save $200 a month. Okay, that brings me down to $286. You could increase any of your monthly expenses in here, or how I recommend or how I use it is taking this money over to step 23, which is the excess buffer money plan step. M2, this cell right here, will automatically populate with what is in orange down here in the monthly excess buffer section. We'll get back to how you can kind of add more money into this category if you want, but this excess buffer money plan is just another way for you to be a zero-based budget. It's like, okay, in a perfect month, you didn't overspend in any of your categories, you didn't need to eat into your monthly excess buffer. How do you want this money to be distributed? Here you can see I give you 5 extra categories. So let's say that this person is saving up for a down payment on a home. So that's what their category number 1 is, down payment. And they decide that any extra money they get, any extra money should be going towards their down payment fund. So we're going to call this down payment, and they say, okay, I'm already putting $200, like that's like my bill to my savings account. Like I'm treating this down payment category for the $200 like a monthly bill, and it's just going into my savings every month. I'm not even thinking about it. But if I have a good month, or in this case, I just have, extra cash flow, I want everything going to my down payment category. So they're going to say $286.76 every month is going to this down payment category. And so that's how you use this. It's just an extra plan for your extra money. And again, it's broken down. It breaks down the 5 categories by percent of the total amount. So that's how you just use it for your regular cash flow. Now, even if you don't have much excess buffer in here, even if you just have that $5, I still recommend that you fill this out. If you want, you can just ignore this amount if you don't know for sure when or how much extra money you would get. But for some people who have a side hustle, a second job, can maybe count on getting some money from family or anything. If you expect to get any extra money this year besides your main job, which you should, I recommend filling this out and giving yourself a plan for how you want to spend this money. So if you can expect regular amounts of income every month, like in this person's case, they have their full-time job, which they're already going to have an extra cash flow of $286.76 a month on. And they're also going to have a part-time job where they're going to bring home, after tax, $300 a month. And so that gives your excess buffer money plan this full $586.76. And they say, okay, I want 90% of this to go to this down payment. So Okay, that's close enough. 89.47% is going to their down payment. And then they want to put the extra, whatever is left, $60. They want to put the extra $60 a month, or really, they want to put 10% of whatever excess cash flow they have every month into their investing account. So again, even if you don't really have much extra cash flow a month, I recommend filling out this excess buffer money plan because it's really helpful. And it could be something as broad as, if you're a fan of YNAB, maybe you just call it the wish farm and you say, any extra money, I want 10% going into the wish farm, which would bring this down to 480-ish. Okay, that's close enough. So you want it to be broken down as 80% going to the down payment, 10% going to investing, and 10% going to the wish farm. So step 24 and then step 25 over here is to list out your total investing goal and total cash savings goal for the year. So some of these numbers you can see are already pre-populated. Based on what you select and put in over here on the paycheck deduction page, it's going to populate, what your pre-tax employer sponsored plans is. And you can see right here it's saying NA and 0, but if I were to say this person has a 457 and they're going to do another 5% a paycheck, it will populate that for me. And so you don't really have to touch these first three. That's why they're not highlighted in gray. You don't need to enter any information. That will populate on its own. Anything in gray is something that you do need to enter. So in this case, remember, they're doing a yearly HSA contribution of $3,000 and their employer is giving them $600 for the $3,600. However, this person spends out of their HSA pretty regularly, so they only are going to be able to invest $1,000 of their HSA. So they're going to put that in there. If you have any other pre-tax investing, you can even change the name of this line if you want. But if you have any access to any other pre-tax investing, like, from your other job, maybe you have your own business and you do it through there, whatever, you can put that information in here. Again, in this case, their Roth 401k information is calculated based on what they entered over here in step 15. And then once again, any other post-tax investing. Everything that's in purple here, as you can see in the key, refers to investing from paychecks or investing that comes, before you get your money, before your net income. So in this case, the options I give you are the pre-tax employer contributions that you fill out over on steps 3 through 5, the HSA, any other pre-tax investing, the Roth 401k, and then if you have an employer match, this person expects to receive, I don't know, $2,000 this year from their employer match. And then in green is investing, that you're doing from your net paycheck. So I give you 4 lines. An IRA, either Roth or traditional, this person is going to be doing $5,000 into their IRA. Any other investing, I don't know, 529 or whatever, or a brokerage, or if you have several brokerages, if you have any other investing that you want to do in your taxable accounts or whatever, this is where you could do that. So this person is going to do $2,000 into their brokerage account. So here it totals everything up in here, and then it shows you your difference. But let's say this person has a goal of doing $25,000 this year. So they enter that in there and oops, they're $2,130 short of that. So there's several ways you can do this. You can just say, okay, that means I need to invest, $4,130 into my brokerage account. Or something that I like to do is go back over here to your paycheck deductions and say, okay, could I increase my pre-tax account to 12%? That lowers my, this is a good example. No, I can't, because that means my monthly excess buffer, that means I'm in the negative. I'm in the negative every month based on my expenses. So again, that's where you ask yourself, okay, is there any expenses that I could lower the amount of? Oh, I think I could cut how much I'm spending on subscriptions a month, and that will save me $100 a month. So this $33,000 now only needs to be $2,900. So you fix that. Okay, that leaves me only $85 as kind of like a buffer or cash flow within the month. So again, the person has to ask themselves if they feel comfortable with that. If they feel comfortable with that, then they can do it. If they don't, maybe you turn this back to 10%. And like I said, you either lower your investing goal because you realize it's not going to be achievable, or you just increase what you're going to be investing after taxes. So maybe you have that line where it's like, okay, I know I need to invest, let's see, $4,130 divided by 12, $344.17 every month to reach this goal. So that's how I like to use this total investing goal. And then you just go through a similar thing here for your total cash savings. You list your total cash savings goals and you list out all of your categories. I give you 10, so these could be a combination between your regular categories here and maybe your extra categories in the excess buffer money plan, and you just do the same thing. So that is step 25. And that is the majority of the spreadsheet. I did mention before, if you are paid bi-weekly or weekly and you want to figure out like your third or fifth paychecks, if you have the same deductions every paycheck like this person does, they can just simply select that. It will show them, their net paycheck, which should be the same as what's entered here. And then they just enter the number of months with extra checks. So this person is paid bi-weekly. There are 2 months in 2021 with extra checks. So this tells them how much their extra pay will be. Now, if you're truly paycheck to paycheck and you're bi-weekly, it might not be extra for you, so you can just ignore this. But if you are paid bi-weekly or weekly, but you only plan and budget for 2 paychecks a month or 4 paychecks a month if you're weekly, and that third or fifth paycheck truly is extra, then this is an example of, okay, how do you want to budget that extra money that you're going to get on those 2 months of the year? If you have different deductions, so like I mentioned, like for me, I only have my HSA taken out of 24, so this net paycheck is going to be different for my 2 paychecks. Then what you would do here is you could duplicate this if you didn't want to like erase all of your hard work. You could duplicate this and then refill out your paycheck deduction section again. And since you don't have your HSA, that would be at 0. And then you don't have your medical or insurance, that would be at 0. And then you would take your net paycheck number that is reflected here, enter that in here. So this is going to be 176303. And there you go. That's going to show you your extra pays per check. So I hope that made sense. Again, just ignore this square if you're not paid bi-weekly or weekly, and then you won't have to worry about it. Okay, so now that I went through all of that and how to use the main plan, I'm going to hopefully quickly go over the second sheet, the simple sheet. So that was how the main spreadsheet worked, where the calculations for the taxes, for the FICA tax and the federal income tax and all of that is done for you. So the simple spreadsheet, just kind of like, if you don't trust my calculations, which fair, or if you just have a really good sense, a solid sense of what your monthly income will be every month, you don't need to kind of do all the math, or you've already done all the math or whatever, this is good for you. So a second spreadsheet is pretty much the same thing, right? Steps 1 through 14 are the same. Step 15 is something different, because instead of the taxes being calculated for you here, it's something that you have to enter now. So the way that I recommend you do this is a website called SmartAsset, and this is their federal paycheck calculator. And this was actually what I was using before I created my spreadsheet. I find that my spreadsheet, again, for me, got me closer to the number than this did. Keep that in mind, but this should definitely get you pretty close. You just have to play with the numbers a little bit. So this pretty much is a calculator that does pretty much everything that I do. You enter in your salary, or if you're hourly, you can enter that in, but we'll just keep it salary, pay frequency. In this case, it's bi-weekly. Now, you might have to play around with this allowances thing, because to my knowledge, they're no longer doing like allowances. In this case, I just set that at 0. And then you would just fill out the withholding information. So I'm not going to have any additional withheld, pre-tax deductions. So these are all from what I entered in here on the simple spreadsheet. So the medical insurance is $45 a check, dental $15, vision $5, 401k, they don't give you two options. So in this case, I did the 401k at 10 and the pre-tax 457 at 5. So in this case, I just had to combine them to be combined 15. The FSA and the HSA, I entered as a fixed amount, and you have to do the math, per paycheck. You can't just, you don't enter the yearly contribution in. One thing I did want to note with this, in this case, this person has the HSA and FSA taken out of 24 checks, even though they're bi-weekly. So if you're doing the math, like you just have to take the $3,000 divided by 24, because not 26, 24, which would equal the 125. And then for the FSA, it would be 1,000 divided by 24 again, and we get $41. So I'm doing done. And then post-tax deductions will be 4% here. And so this, like I said, calculates everything for you. It tells you what your estimated biweekly take-home pay is. And what I recommend you do is it breaks down your taxes into federal taxes and then the FICA and state insurance taxes. So you would just add this up. So you take the federal taxes of $272 plus $193 for FICA, and that gives you $465. So if you enter the taxes here at $465, this is doing the math and it's saying that your net paycheck will be $1,530.83. This did the math and say it's $1,531. So it's pretty much the same. And again, this is taking into account what you just entered in for the taxes. Or the other way to do that, if you really just don't care and don't want to see these paycheck deductions, you could just hide this. Don't delete the columns, just hide them. And you could just enter in directly here what your net paycheck is. Again, maybe you just use SmartAsset and you just take what this calculates for you and you just copy and paste that into here. Keep in mind that once you copy and paste that, that will delete this formula. So if you want to go back to the old formula, you're gonna run into some problems. So just keep that in mind. But you can just do that and then just use the rest of this spreadsheet similarly to how we discussed on the main spreadsheet, but you just entered the number in yourself. So like I said, this from now on is pretty much the same as the main spreadsheet. Once you kind of take out the paycheck deductions, and once you get your net paycheck and monthly income done, the rest of this, the monthly budget, the excess buffer plan, the investment and savings goals, and then the third or fifth paychecks, that's all pretty much the same procedures and steps. So this is why it's called the simple spreadsheet. It's simple. You can either enter this number in directly yourself, use another calculator to do it, or whatever. And so that's why I think it can work for this simple spreadsheet could work for anyone regardless of your income or your taxes or anything like that. So I hope you found this helpful. The next section is just going to be a little bit more on how I calculate the taxes on this first page. So if you're not using this first page or you don't really care how the taxes are calculated, you don't need to watch anymore. And you can go ahead and go straight into the spreadsheet. Okay, so I'm gonna expand this for the people who are still watching and just clarify a few points. This FICA taxable amount does take your gross paycheck and then subtracts the per paycheck contribution for the HSA, FSA, and then your medical and dental insurances. So that's how I come to the FICA taxable amount, because HSAs and medical insurances are, for the most part, unless you have a very specific different type of plan, they are pre-tax for Social Security and Medicare. So this, as you can see, what is taxable for Social Security and Medicare is actually less than your normal gross pay. And then I just have a calculation for what that is per the Social Security taxes per check. In this case, it's $168.12. Then I have this number of the number of checks it will take to reach the Social Security maximum taxable amount, which is $8,553. And that's mainly just calculation I did relating to if you reach the max calculation, but otherwise that's like, you don't even need to care about that. And so then this line, FICA taxes per check, takes the Social Security taxes per check plus the 1.45% for Medicare. But it also takes into account if you are over the $200,000, you have to pay an extra 0.9% in Medicare taxes. So like if I put this number as like 300,000. This is where this number is going to, this part of the calculation is it's going to come into play. It's going to calculate that. And then here, the federal taxable amount is, okay, let's take this back to 71,500. The federal taxable amount per paycheck is the FICA taxable amount minus the amount per check for your pre-tax retirement or other pre-tax deductions. And then this number is then taken into up here in the federal taxes amount. And this number is the federal taxable amount per paycheck times the number of paychecks to get the yearly federal taxable amount. And then you subtract your standard deduction, what any other deductions you have. And then this number is what you'll actually be taxed on. Take into account your standard deduction, everything like that. Then I have a formula here to show like what your highest tax rate is. And then I have a really long calculation. And again, I'm using 2021 tax brackets. So these numbers are different from the 2020 tax brackets. But this tax estimate will take into account how you're not paying 22% on the entire 47,000. You're only paying, let's see, 22% on everything from 40,000 and above is what you're paying 22% on, which, so $7,000 of it. And so this formula does take that into account. And then to get the per paycheck estimate, again, we're taking the yearly tax estimate divided by the number of checks. And then for step 21, you can add any additional withholdings. And so this federal taxes per check adds per paycheck estimate plus the additional withholdings. And that is then included in this total taxable amount. So the total taxes is the FICA taxes per check, which again already includes the Social Security taxes and the Medicare taxes per check, plus it adds your federal taxable amount to your state tax. So it's assuming that your federal taxable amount is going to be the same as your state taxable amount. And that is a big assumption that just may or may not be true depending on how your state handles taxes. So that is something to keep in mind. Something I wanted to note is if you live in 48 of the states in the United States, your HSA is treated the same way as in your state as it is federally, which means it lowers your taxable income. However, California and New Jersey are two states where it lowers your federal income tax, but it doesn't lower your state income tax. So this number is already going to be a little bit off because your federal taxable amount is going to be less than what your state taxable amount is if you have an HSA. So that is a note. It's not perfect, but I just was like, okay, I can't come up with a formula that would be able to calculate this, and it's only going to impact people in two states. Granted, two of those states are very populous, but I did my best, folks, and like I said, I created this mainly for myself, so I hope it's helpful for other people, but I'm not gonna like beat myself if I can't get this one formula perfect for everyone. So that is the main info of the taxes, I believe. And like I said, this will all populate. Like we said, if you put it over one of those limits, it takes that into account. So I think with all of that being said, this wraps up this video. I'm sure it's very long. I hope it is helpful and not just like a bunch of blubbering and you're like, I can't follow. That's everything. If you need there's a bunch, I'm sure there's a bunch of timestamps below. And if you need to see any more specifics, pretty much all of this is explained or should be explained in the instructions on the first tab. All right, so I'm going to go ahead and end this video, and I hope you find the spreadsheet helpful. Let me know down below if you have any questions.